Welcome to another episode of Business by the Numbers. I'm your host, Demarest, CPA with Parmelis and Associates. So I was talking to a client earlier this week, I guess late last week, complaining about one of his technicians. And you guys always ask me if I was talking about you when I do these episodes, so that should really narrow down the pool here. But anyways, his complaint really led us in another direction, and I said, hey, that is a perfect idea for a podcast. So he was complaining about that he paid his technician 40 hours, he's hourly, but 20 of those hours he paid him to do a comeback job that he felt was this guy's fault. He was talking about other stuff on it, but really was explaining that how frustrated he was that he paid that guy 20 hours for work that he didn't produce. The issue there was when I explained to them that it was costing him much more than what he was expecting, he was really shocked. You might be too, and that is exactly what we're going to talk about today. Shop owners, are you struggling to find and retain top-tier talent for your automotive shop? Introducing Promotive, on the web at gopromotive.com. With over 40 years of combined industry and recruiting experience, we're the ultimate staffing solution. We go beyond traditional agencies. Our team provides dedicated recruiters and account managers advising on processes, compensation, and benefits. We focus on placing technicians and service advisors with shops that offer the best culture, training, and long-term growth opportunities. Trust our experience to match the right talent to your shop. We carefully select shops that value employee excellence and provide an environment for success. Our dedicated team leads the entire process, leveraging our industry knowledge and expertise. Partner with Promotive and experience their advantage to help you build a high-performing team that drives your shop's growth. Visit gopromotive.com today and let us help find and keep the best talent in the industry. Before we get into that, I just want to stop and say thank you to you and the rest of the dedicated listeners. Remember, if you want to hear your question answered on here, just have a question for me or an idea for a future episode, shoot me an email at podcast@parmelis.com. Don't forget my new book, Beyond the Bays, a financial playbook for auto repair shop owners, which was inspired by many of your questions and popular episodes, is now available on Amazon for paperback and Kindle. Want to talk to us about accounting and tax services that we can offer your repair shop? Shoot us a text at 301-307-5413. And last but not least, we cannot forget our dedicated sponsors, Promotive and Wickedfile. It was awesome to see them both out there. Was even more cool to talk to a lot of you guys that came up and said, hey, Hunt, I heard about Promotive, I heard about Wickedfile on the podcast, reached out, and it's working. So I love to hear those stories. I know Promotive and Wickedfile do as well. So if you want to check it out, if you want to get your back office under control, or you need to hire top talent for your top shop, give them a call and let them work their magic for you. Back to the story that we were talking about before. And the story starts like a lot of people. They have an underlying productivity issue. Some of it is lack of work, but some of it is dealing with comeback issues. And so whether it's a part failure, tech error, Goodwill, all of these really have the same idea. The causation is different, but what we are going to talk about here as far as the true cost is always the same. Is it what you actually lost, or is it actually what you paid out? Right? And if you're saying, well, Hunt, aren't those the same things? Then this episode will be perfect for you. Let's go a little bit more into this story because I think that this might start to resonate with even more people. Even just the fact when I said of like, hey, burning hours, paying guys for hours that they aren't actually producing work is going to be a pain point for all of you. But if they're not doing something else on it, it's not really the same idea here. So the story starts like this. This guy's got like 3 technicians on it. He's got one guy that continually is costing him money, right? But again, like I said, costing him money in a different way. Most of his guys in his shop in general is pretty productive, but this specific technician has been having so many issues that this is where it came up, right? He said, hey, Hunt, this guy's costing me so much money, and essentially did this exercise, right? Said, hey, I pay him $25 an hour. For the last couple of weeks, I've been paying him for probably 20 hours of him fixing stuff that he had messed up. Some of it was a parts failure issue, but it was costing him a lot of money. Just like you might have been doing that simple math in your head, he looked at last week and said, I paid that kid 20 hours at $25 an hour, right? I just wasted $500 because he was dealing with half of a week on a screw-up job that really shouldn't have been in there. right? So was there for 40 hours, 20 of which he billed out at a normal street rate, and the other 20 he just ate, right? Because it was all unchargeable work. But the reason why we are having this episode is not that idea, right? I think you guys get this idea. If I'm paying my technicians and I'm not getting paid from the customers, you're not going to have a good time. What really kind of changed his mindset on this is how he thought about what he was losing. Are you losing what you were actually paid out, or are you more concerned about what you weren't paid, right? And this is a really, really important idea, other known as opportunity cost. But hey, the cost of what I actually put out is sometimes a sliver of the true cost, which is what didn't happen, right? The cost of what if this didn't happen? What if I had those bays available for a retail customer? What if I had the space available? What is the highest and best use, and how much money could I have really made there? And so what this comes back to is when we look at this, I'll agree on the 20 hours, right? The 20 hours is what we have an issue with, but I disagree on your cost or the true cost of this, right? Which is the whole episode is talking about true cost. Sure, you paid $25 an hour times 20 hours, right? That cost you money, but that's not your real loss here. Your real loss is in those 20 hours, since you billed out a whopping $0, you lost $165 an hour. Now, the bad part about this is if your labor rate is higher than $165 an hour, this is even worse for you. $165 an hour is what this guy's effective labor rate is. This is what he charges out. So if that technician was not on this comeback job and he was doing retail work, he would have generated an estimated $3,300 in labor sales. Gone out the door, never going to get back. And we're going to talk about parts a little bit later on this, but parts are completely different, right? Because parts, if you don't sell it this week, it's sitting on the shelf, you'll sell it next week. Labor evaporates immediately. Whatever hours I don't sell today do not carry over to tomorrow, right? They're gone. End of story. There's no getting it back. But we also need to talk about parts here because this is something that even compounds it even further. If I would have had those 20 hours to sell to a retail customer, I know I would have gotten an additional $3,300 in revenue. So it's not just a $500, an additional $3,300 that we're missing. But how many times do you guys sell 20 hours of labor with $0 in parts? Realistically, the true gross profit dollars lost on this specific example is not $500, it's closer to $5,000. And that right there is the reason why we have this episode. Because for a lot of you, I think you get this idea. For a lot of you are tracking this on your financials, and what we'll talk about at the last part of this episode is, all right, Hunt, how do I start seeing this actually on my financials and setting up my shop management software? But for a lot of you, I think that you understand the idea and maybe know that true cost, but don't like to think about it. But if you start looking at this, if you start looking at the true cost of, hey, not in what am I paying that technician to do nothing, but what could that technician done if that time was freed up to do other things? Anytime that you're looking at a business, whether you're looking at your own self of what you need to be doing, you should always be looking as what is the highest and best use for any of my team members. And not that you are going to go out there and say, I can't have my team members doing non-billable work, but more or less that should be the name of the game. Right? Instead of trying to cut costs, trying to say, how can I get my people more effective where they're only doing profitable stuff? This is the part of my job that gets a little bit tricky here because where do you think that this conversation led, right? This person was very annoyed with his technician before he called. I don't think this technician has a job after our call. Was this my fault? Maybe, right? I guess some of it could be put onto me because I opened this guy's eyes. But I think that this is something that a lot of you might go back and look at as some of those lower production technicians and looking at saying of like, hey, is that person costing me money by having them out there? Or is he costing money by having that person out there and not someone more qualified? And I get it, right? This is a very, very, very hard labor market, but the same idea on wasting hours can be looked at on an unproductive technician, an unorganized technician, a technician that doesn't show up on time or whatever it is. Don't look at the cost, look at the opportunity cost of what you're losing. This kind of goes back to the overall idea of, cutting your overhead to try and make more money. Would you go out and rather cut the Friday lunch that costs you $100 or have the guys do a half hour more work, which gets you the same amount of money? If you want to cut your expenses or if you want to cut your labor, great. It's going to be much more profitable for you if you can increase your labor sales versus decreasing your labor cost. right? Think about that. I don't care what I pay these guys as long as they get enough work, right? But if they don't get enough work, it doesn't matter how little I pay them, I'm not going to have a good business. So I think you guys get this idea, but if you're a listener, you know I like to hammer this idea home. And then also, like we just kind of did in that example above, it goes on to other things, right? This was specifically talking about comeback work, but the same idea can be said about warranty work. The same idea can be said about customer goodwill. The same can be said about non-paying work for your own vehicles. The same can be said about non-paying work for your loaner cars, right? The whole idea is to look at the opportunity cost, the what if side of this, not just your hard cost and what is sunk. Like I mentioned on this, we are going to talk about parts, and there is some examples on it, but it's a little bit different mindset, right? Because the whole idea of labor inventory is finite. Labor inventory evaporates. To a large extent, parts inventory doesn't, right? Yeah, sure, it ages out. You can't have tires out there for 5 years, but if you have an oil filter out there today and you don't sell it today, it's not like someone's going to come in and throw it in the trash, right? But if you want to think about labor inventory, that's what it is. Hey, whatever you have in labor goes up on that shelf at the beginning of the day. You can sell whatever you can off that shelf at the end of the day, but after that, the doors are closed and the guys are going home. So whatever labor inventory you have left over that wasn't sold goes in the trash, sunk cost, right? Or opportunity cost, depending on what happened. But like I mentioned before, this is not just for comeback works, right? This is not just directed at employees screwing up stuff or having parts failure. This stuff does happen, but this can be said of other things as well, right? So let's say that you are doing Goodwill work for free. You spend an hour helping out a customer because the guys messed up some trim panel, right? How do you look at that same exact example? A lot of people would look at that, hey, I had 2 guys out there, right? They maybe are flat rates, so maybe you didn't even have to pay them anything somehow, right? Even in that example, you lost $400. Right? So let's say you're able to leverage your, Goodwill with your technicians and say, hey, you guys kind of messed this up doing your job. I'm not going to pay you guys to do this. Or, hey, we just help people out. It doesn't really cost you any money. Not only is it costing them a good bit of money if they're not flagging hours, you're probably losing out on at least $400. Again, depending on what your labor rate is. Does this mean that you guys should not be doing any non-paying work? Absolutely not, right? This is part of being a good business. Is sometimes you're not going to get paid for this. Sometimes doing the right thing now is going to turn into dollars and cents later on. But what I'm talking about is you need to quantify this stuff. What I see in this industry is that for the most part, right, there's some outliers out there. Shop owners want to help people out and they want to do it as cheap as possible. And it's a lot of times at the detriment of yourself, but it comes from a good place. And one of the things that I always say is it's great. It's great you want to be charitable. It's great that you want to give this away and help out your community. You cannot do that without profit, right? So, hey, if you want to give out that Goodwill work for free, get a true idea on what that's costing you so to make sure that you're charging your paying customers enough that you can do that stuff. Another aspect on this that I was trying to figure out a way to quantify on this, but it gets even worse because these are the labor hours that we see, but one of the biggest hurts to efficiencies or any sort of labor sales on this is inefficiencies, right? Stopping and starting work, pulling stuff out. And when a comeback comes in or when you have a parts failure or something like this, do they wait or do they get handled immediately? Right? Arguably, if the situation is worse enough and you just screwed something up yesterday, whatever car you have in a bay is going to get yanked out so that this car can go in. Hey, great that you have enough work that you don't have to pull these cars out. Again, you're stopping, you're pulling a tech off of a job, you're putting them on another one. These sort of inefficiencies, I would argue that if you think that you spent 2 hours on a comeback, you probably spent 4 hours on it with the other production that was affected on this. So what I'm trying to explain to you guys is, hey, that hour that cost you $25 might cost you $5,000, right? You'd have to have a really high labor rate, but all of this stuff is costing much, much more than you think, right? It's not the cost, it's the opportunity cost on it. Every month, auto repair shops can lose over $20,000 in uncredited parts, cores, and lost profits. Wickedfile's AI-powered software is a game changer. It helped one shop owner recover over $10,000 in missed credits, and others have recovered tens of thousands more. Wickedfile puts cash back into your business and hours back into your day. Stop leaving money on the table. Visit wickedfile.com to learn more and get started today. I teased this enough, and I've talked about this kind of in the past in a different way on it. The idea of opportunity cost can be had on parts as well too, right? And I think that you guys already understand this a little bit, And it's a labor that you are ignoring, but I think you guys missed the point on a lot of this. So first and foremost on this is you guys are pretty bad at inventory control, right? And don't argue with me and say, Hunt, no, we're pretty good. I do your taxes. I call you up and I ask what your end of year inventory is. And you say, Hunt, what was it last year? It was $4,963. It's probably the same this year. I do not care, right? I have nothing in inventory. Think about how many of you guys have told someone, well, like, we keep virtually nothing in inventory. And that's okay if you actually keep nothing in inventory. But if that $5,000 of inventory actually looked like what it was and was piles of cash sitting on that shelf, would you have the same frivolous attitude on inventory? No, right? So that's where I'm going to start off on there first. Like, treat your inventory for what it is. It is at the very least thousands of dollars, and you guys will chase down $20 for other stuff, but for some reason don't care how many oil filters you have. If you want to be worried about parts, the good news is that inventory stays forever. The bad news is someone can steal that inventory, right? So be careful. But let's go down that, right? Let's talk about this. And this is really the most common example on it. I guess either someone stealing it or someone putting it on a car for free, right? It's like the same idea. You have a part, it's lost, you didn't sell it. What does it cost you? So same idea, like we're talking about on labor. If someone steals a $100 part from you, did you lose $100 or $200? I ask this question all the time. It's a trick question, right? Everyone gets it wrong. And a lot of people say, hey, if you lost a $100 part, well, then you lost $100, Hunt, right? What is the trick here? I would argue, and I would be right, that you lost $200. And here is why, right? So in this example, we have one water pump, whatever it is. I always use water pump. Probably not $100 anymore for any vehicle, but maybe a Honda. I don't know. So we got $100 water pump, or we have two of them, right? So if we have two $100 water pumps on this, in a perfect world, we pay $200 and we sell both of them and we make $400, right? Now, if I have two water pumps and one of them gets stolen, then I have one that costs $100 that I'm gonna sell for $200. What's my difference in sales? So if I had two to sell, I would have sold $400. If one got stolen, I can only sell one and only make $200. So if there's a $200 difference on how much I'm actually going to make by selling these, then explain to me how I only lost $100. If you guys were laughing to yourself and saying, Hun, I don't care about my inventory, it's only $5,000. What about if you thought of that at a true retail cost and you say, and now your inventory is $10,000? Again, you should care at the smaller amount, but if you don't care at the smaller amount, double the value. That's really what you're losing if someone was to steal it, if someone was to lose it, if someone was to mismanage it and it gets thrown in the trash. How many times do you think you go out and you buy a part because someone can't find it in your storeroom or in your part shelf? This stuff happens. It costs you money. And like I said, it could cost you a lot more. It's not just a cost, it's what you could have sold it for. Whether that's parts, that's labor, it doesn't really matter. Hunt, did you just come here to browbeat us and just say, hey, you guys don't understand any of your costs right? No, I think that the reason that most of you guys don't understand this correctly is because you guys are not reporting it. If you say, hey, Hunt, if someone's not paying me, that doesn't go through your shop management system, then you are the prime example of someone that doesn't know your true cost. If non-paying work doesn't get booked in any way, shape, or form, then how can we ever have the opportunity cost on our financials? Sure, the cost of what we're paying our technicians is going to be in there. Sure, the cost of what we're paying for that part is going to be in there. But as we know, we would like to quantify what that true cost is. I've talked about this in the past. I'm going to do kind of a snippet of this. I have done this probably a couple of years ago. I think episode 45. I did all types of internal warranty work. So if you want to hear about internal warranty work where you're getting a credit, where you got a partial payment on it, where you got a loaner car, go back and listen to that episode or shoot me an email, right? They're always kind of weird questions, but the general idea on this is exactly the same. When you're doing a ticket, whether someone is paying or not, you're always going to do it at full retail, right? Because this goes back to the opportunity cost. If I'm looking at a ticket that no one's going to pay me that's $0, then I have zero cost to record. But if I have a customer that comes in and I say, hey, this is how many hours it's going to be, and it's going to be an $1,800 ticket, then so be it. That's what the ticket is going to be. That will now reflect the accurate sales of what my technicians produced and what my counter sold, not necessarily what we're paid. A little bit different depending on what kind of shop management software you have, and some of them have built-in warranty or no-pay features on it, but the most classic example that we use and can be used in any shop management software out there is all you need to do is you need to set up a credit card called warranty work or called comeback or called part failure. And a lot of times people will segment those out. Right? You can separate the different payment types because I would argue that you want to know the difference between your people messing up, the parts house messing up, or you doing something is just goodwill for a customer. I have people that track this 10, 15 different ways on it. I don't think I'd go into that level of detail, right? Think to yourself, I'm going to track this in a way that I'm going to be able to go back and use this information. Right. And so when I look at that, like the idea behind it is if I spent $20,000 on warranty work last year, I'm probably going to look at that differently if it's all customer screw up or if it's all part failure. Right. So you want to know this, but again, don't go crazy on it. When you go ahead and you set up this warranty work credit card or this comeback credit card on it, all you need to do is you need to open up the invoice and you need to pay it with that credit card. Right? It's going to go out and it's going to look like you got paid just by any credit card. It's going to post the sale. All of the history is going to be there for the customer. And you now have your true opportunity cost. Why? Because when you book that into your QuickBooks file, instead of that $1,800 hitting the bank account, that $1,800 is going to hit comeback expense or warranty expense or parts failure expense, whatever it is. Right? So what this ends up looking like is you have $1,800 in sales and $1,800 in expense, right? Those two wipe each other out. So the net result is always just going to be what you paid your technicians and what you paid your parts. So is this what I'm talking about going to make you pay more in taxes? No, it is not going to change your net income whatsoever, but it is going to increase your sales so that you can see your true expense. A lot of people have changed their business or changed their mindset on the business once they start looking at that, right? And they say, hey, I went from a business that has a productivity problem to saying, hey, my guys are very productive. My guys are doing work. I got to figure out why I'm not getting paid for 20% of the work that we're doing, right? Is it a production or a pay issue? You can manually do this in QuickBooks. If you're lost on it, and if you're one of my clients, obviously reach out and we'll get this all set up for you. If you're not one of my clients, shoot me an email. I would be happy to kind of walk you down through if you're having some issues with this, depending on what you're doing, or give us a shout, right? This is the kind of stuff we set up for people all the time so that you can get accurate numbers. If you don't have accurate numbers and if you don't understand your numbers, then none of this stuff is going to make sense. But it's also not rocket science. It's fairly easy to do. The easiest way to do this is if you use Backoffice or Accounting Link, you can manually set this up. So if you're using Backoffice and Accounting Link, you can actually go in and tell them, hey, this credit card is not really a credit card. When someone pays with that credit card, automatically make this payment go to this expense category. Super slick. Works really, really, really well. Obviously, if you want to do this manually, cool, right? If you want to do this for Backoffice, there's a way to do it as well. We love Backoffice, been working with them for almost, 25, 30 years now. Just saw them out at Vision. It is the only integration that we really recommend or I've ever seen actually work, and it works really, really well. Got to get a little bit set up correctly, but once it's set up, this stuff is really, really slick. And if you have Backoffice and if you have Accounting Link set up, right, this is just an extra step of process and procedure for your front counter. This is also a massive thing when we're doing comparisons between your shop management system and your QuickBooks file, right? When we're looking at productivity, when you're looking at different stuff like that, if you don't include some of these non-paying work in there, it gives us a very different story. Hey, were the guys standing around for 25% of the month, or were they extremely busy just not doing non-paid work? And that's a question that you might need to go back and ask yourself for your own shop. Like a lot of things, I don't think this is new information, or maybe it is. Hopefully it's new information because you just learned something that can improve your business. But the same flip side, maybe this is just reinforcing some stuff that you've already known. Like anything, the worst goal is one that is met, but still not enough, and a lot of time that is from a lack of understanding of all of your financials. Remember, it's not what you paid, it's what you weren't paid. As always, please share with friends. If you have any questions, comments, or ideas for a future episode, please shoot me an email at podcast@parmelis.com. Just want to say thanks again for listening on the Automotive Repair Podcast Network. You can find the rest of the shows on the new Automotive Repair Podcast Network app or your other favorite podcast listening apps. So thanks again for joining on Business by the Numbers. Stay safe out there, and I will talk to you all next week.